Hello, students. A continuation of the first lecture where I talked about the meaning of a system and what is the role of RBI and the financial system. Then we talked about the different organization of the Indian financial system, or it may be the organization or the different components that we talked about, which consist of the different components, related components in a system is a must to become a system, and then a central unit, a control unit which control the whole system. So this we have seen. Now in today's lecture, we are going to further have a look at the how this RBI was basically formed and what are the different roles and responsibilities of RBI in the Indian financial system. RBI is basically it is the Reserve Bank of India and it acts as the central bank in India. Its function is basically to control and monitor the whole banking system as well as the financial system of the country. Now, we'll see that in every country there is one organization which works as the central bank. And its work is usually to control and monitor the banking and the financial system. And in India, that role is fulfilled by the RBI. RBI was established in 1935 and it was nationalized in 1949. The RBI plays role of regulator of the banking system in India. The Banking Regulation Act 1949 and the RBI Act 1953 has given the RBI the power to regulate the banking system. Now we'll have a look at the different roles and responsibilities of RBI. It has different functions and different roles. The first one and the most important one is RBI is the regulator of financial system. The RBI regulates the Indian banking and financial system by issuing broad guidelines and instructions. The objectives of these regulations include controlling money supply in the system, monitoring different key indicators like we can say the GDP and inflation, maintaining people's confidence in the banking and financial system, and providing different tools for customers' health, such as acting as a banking ombudsman, etc. Now, the next important function of RBI is the issuer of monetary policy. The RBI also formulates the monetary policy twice a year. It reviews the policy every quarter as well. The main objective of monetary policy are to control inflation, to control on bank credit, to control interest rate, etc. The tools that are basically used for implementation of the objectives of monetary policy are cash reserve ratio CRR and statutory liquidity ratio SLR, open market operations. Different rates are also there such as repo rate, reverse repo and bank rate. So we'll be talking about all these different financial tools that are used to control this in our next lecture. RBI is also the issuer of currency. Section 22 of the RBI Act, it gives authority to the RBI to issue currency notes. The RBI also takes action to control circulation of fake notes. Next is RBI also is the controller and supervisor of the banking system. The RBI has been assigned the role of controlling and supervising the bank system in India. The RBI is responsible for controlling the overall operations of all banks in India. These banks it can be like public sector banks, private sector banks, foreign banks, cooperative banks, or regional rural banks. Now, the control and supervisory role of the Reserve Bank of India is done through the following. What are they? Basically, the first one is like issue of license. What is issue of license? Issue of license is like under the Banking Regulation Act 1949. This RBI has been given the powers to grant licenses to commence new banking operations. The RBI can also grant licenses to open new branches for existing banks, and the RBI provides banking services in areas that do not have this facility as well. The second was is prudential norms. Prudential norms means RBI issues guidelines for credit control and management. RBI is a member of the Banking Committee also on Banking Supervision, that is BCBS. So we can say that as such, they are responsible for implementation of international standards of capital adequacy norms and asset classification as well. So these comes under the prudential norms. The next one is corporate governance. Corporate governance, basically, you can say the RBI has power to control the appointment of the chairman and directors of banks in India. The RBI has power to appoint additional directors in banks as well. Next is KYC norms. KYC norms means what is the role basically? KYC norms is know your customer. To curb money laundering and prevent the use of the banking system for financial crimes, the RBI has this KYC guidelines. So every bank has to ensure that KYC norms are applied before allowing someone to open an account. Then we have the transparency norm as well. Transparency norms is basically, this means that every bank is to disclose their charges for providing services, and customers have the right to know this charges as well. There are also many other different roles also are there, like risk management is also there, where RBI provides guidelines to banks for taking of the steps that are necessary to mitigate the risk management. Then we have audit and inspection as well, like the procedure of audit and inspection that is controlled by the RBI through offsite and on-site monitoring system. This is on-site inspection is done by the RBI on the basis of CAMLs like capital adequacy, asset quality and management, earning, liquidity, system and control. Then foreign exchange control is also there, where the RBI plays a crucial role in foreign exchange transaction. It does due diligence on every foreign transaction using the inflow and outflow of foreign exchange. It takes steps to stop the fall in value of the Indian rupee. RBI also takes necessary steps to control the current account deficit. They also give support to promote export, and RBI provides a variety of options for NRIs as well. Now, the last one, if you're talking, it is like development. Development is being the banker of the government of India. The RBI is responsible for implementation of the government's policies related to agriculture and rural development. The RBI also ensures the flow of credit to other priority sectors as well. There we can also see that like section 54 of the RBI, it gives choice on giving specialized support for rural development. Priority sector lending is also a key focus area of the RBI. Now, apart from all this, we can say the RBI publishes periodical review and data related to banking also. The RBI plays a very important role in every aspect related to banking and finance. So finally, we can say the control of NBFCs and others in the financial world is also assigned with RBI. Now, in our next lecture, we are going to cover up the money market. What's the meaning of the money market? Its importance, the characteristics of money market, different instruments of the money market that we'll see in our next lecture. Characteristics of the different money market. So for that, thank you till then. Let's meet up with the next task, that is money market.